Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day, Wednesday, June 22nd. And big economic news releases will be coming out a little later today. And that is the statement after the Bernanke will be making after their Fed meeting today. That's going to be very important, obviously, because everybody wants to know what's he gonna say, what's his layout for the rest of this year forecast. So some of the things he's gonna probably touch on will be the end of quantitative easing two. Because of that and anticipation of those particular words, the stock market's down a little bit because of that. But they're kind of anticipating, kind of hanging in there to see if he does say that, and if there's going to be any possibility of quantitative easing three, if he's going to address that. So the bond market and the stock market both can be looking at those particular words, where he's also going to find out what does he think about the economy, is it going to be growing, or if it's going to slow down, what his projections for the rest of this year. So those are things anticipated that it's going to need. Yesterday we had a little bit of a rally on the treasury market as well as the stock market ended nicely as well. And that was due to the Greece getting past one of the first hurdles. So it's going to be a long, drawn-out hurdle, a lot of hurdles to go through. And that's the first that Papandreou, the prime minister, was able to get the vote of confidence to move forward. And so the next round they'll have to go through is actually get the austerity measures passed by the people. That's not going to be any easy feat, as they've been seeing a lot of riots in the streets due to this course of action. And then once they get past that, then they have to sell the investors to get the funding to meet their funding needs, as well as get the credit, like SP and all those guys, to go ahead and buy into that their debts will be okay, that they'll be making their payments on time. So the credit ratings is going to be important. So that's going to be a drawn out process, and look for a lot of ups and downs along the way for those. And then also it came out that there's a little bit of concern that popped out yesterday in the statement on Spain's financial well-being. So, but right now they're kind of hanging in there. So we'll see what happens there. But also, with Greece, they're the first ones that came out last year, and of course we had Ireland and Portugal is mentioned in there as well. So we'll have to see if those guys will poke rear their ugly head, so to speak. That comes along. So other economic news releases, we have the home prices popped up in April, 0.8%. So that's good news along that way. And so let's go ahead and see where the bond market is and what interest rates are doing today. So here's the bond market, and what we got here is a nice little rally coming up, and I think they're expecting, because there's expectations of the end of Bernanke saying later today the end of QE2. I think the bond market is kind of rejoicing a little bit. We start up about 12 basis points higher than where we left off yesterday. We had a slight dip, so we closed that gap that had occurred about 3 basis points. And right now, the last hour or so, we've actually, or not even that, really half hour, we've jumped up about almost another 30 basis points. So we're up about 31 basis points so far today from where we left off, or from where we were on yesterday's close. So we're having a nice little rally here, and this could continue. And if we can keep this up, this could continue even later on. As we mentioned, also GDP and the durable goods orders coming out on Friday, so that could also be a market mover. So, but the problem is they've put in not so good numbers estimates for those. So unless it gets really worse than that, that could kind of cause, that might help us out. But unless we hit those not so good numbers, that might be, kind of like a stale point for us as well. And if, of course, comes a little bit better, then of course that could kind of ruin our rally a little bit as well come Friday. So right now interest rates are improving, and I expect to see some probably rate improvements, maybe close to the day, maybe later in the day. They'll probably see if this continues, especially after Bernanke's statement today, and see where the bond market goes from there. And but I expect a nice day today. All right, folks, have a great day. And folks, I'm also a loan officer. If you're looking for a mortgage in the state of California, I can also help assist you. You can check out my other websites here at obviously at Mike's Daily Market Report and MikeBjork.com, even CaliforniaMortgageTips.com, and the Mike's Homebuyer University.com. I have some great resources there. But feel free to give me a call at 310-694-3544. I can do refinances, and I also do purchases. So I can help you get pre-approved to buy that next home here. So thank you and keep me in mind.